Okay, let's discuss about customer profitability analysis. Right. So, CPA is an application of activity-based costing technique. Okay, to customers. Traditionally, ABC was applied to products, but was applied to products. But in modern business environment, it is vital that the organization respond promptly to the demands of customer analysis on the basis of customer, right? So the approach is exactly same as the normal activity based approach. We aim to identify the profitability of each type of customer, right? We can then identify unprofitable type of customer and then attempt to persuade them to alter their behavior, right? Or we could even charge them extra, right? So this helps to identify where we should focus our cost reduction effort, right? So we could basically do it in number of ways that can be done, right? So since we've been given all this gross profit margin, all you need to do is just multiply the order placed by the order processing dispatch cost, and then the billing cost as well, right? And then sales visit as well per visit, right? So we could do all these things, right? So similarly, so you could design it in any kind of pro forma. Okay, you could use this particular example, but there is a pro forma which is given, so there is no set of pro forma. But what you need to do is you need to provide the revenue, right? Of course, some of the customers will ask for discount, so you will need to adjust for discount, and then you will get your net revenue, right? Then after that, you subtract your gross profit, your cost of goods sold, and then you get your gross profit margin, right? So that's your contribution until over here. So 42 is the margin, right? Next, after that, what do? We so this is revenue from that particular customer only. Yeah, that's particular customer. Discount is discount given to that particular customer only, right? So customer specific cost, right? So such as credit period could be 3, inventory period could be 28, right? So the net margin we can calculate after that. Okay, so all these things we can calculate at a customer level, right? So based on that, we will know which customer is profitable, right? Who is profitable, and based on that we can charge them extra money as well. Okay, so if it is not profitable, we normally can charge them extra as well, right? Right, so what is this? We could look at this particular example as well. Okay, so supply shoes to Sam and Gollum, right? So Sam is there and then Gollum is there, right? So has a list price of $50 and costs 25. So Gollum buys in bulk and receives a 10% rate discount for every 100 pairs of shoes or more, right? Sam, on the other hand, it receives 15% discount irrespective of the order size, because the company collects the shoes and thereby saving any distribution cost, right? So the cost of administrating each distribution, each order is $50, right? The distribution cost is 1,000 per order. Sam makes 10 orders totaling 420 pairs, and then the other one orders 5 for 100, right? 100 pairs. Okay, what can be done? So let's just do the revenue part. All right, all you need to do is 50 times, for the first one it's 50 times how many is there, 420, right? In a year he makes 10 orders totaling 420 pairs, so 420 into 50, 21,000. Right, what about the next guy? 100 pairs at 50, that will make us 5,000, right? Next thing we can do is discount. All right, let's discount. Discount is basically Gollum receives 10% discount for every order of 100 pair of shoes, right? So for every 100 orders, so he's ordering how many orders? 420 divided by 100, right? So 4.2. So he receives a trade discount, right? He receives a trade discount. So all we need to do is we can simply look at the discounts that's being offered to them, right? So irrespective of the size, it's just 15% for the other one times 15%, 750, right? 750 for this guy. How many discount does he receive? So in each purchase, he's going to make a purchase of how much? 5,000, right? So 5,000, so 20,000. So it's going to be 5,000, and then 5,000 will be there, right? So he's going to receive a discount of 500. So 500 times 4, it's the same thing. 2,000 discount is going to receive, right? Next thing, I'm just not accounting for the 0.2, huh? Next thing is less the cost of administering each order is admin cost is, we could have done GP at the moment, gross profit, right? We could have calculated that, and then we need to subtract what? Admin, right? So that is 50 per order, huh? So 10 orders will be 500, right? Next thing is 5 orders, so 50 will be what? 250, right? 5 orders only. And then what else? Distribution cost is basically applied to whom? Sam receives 15% discount. Okay, it's not that, it's the Sam who receives 15% discount, right? I was just thinking that, I was like doing it differently, for the other one. So 15%, right? So 21,000 times 15% will be 3150 discount this guy will be receiving. So 21,000 times 0.9, so 18,900, right? 15%, 21,000 times 15%, and then okay, so 15% is receiving not 0.9, 0.85, huh? 21,000 times 0.85, so that's going to give us 17,850. Let's just check, plus 3150, right? 21,000. Next thing is, for this 5,000, how much are we receiving? 10%, right? In this case, so Gollum, right? So Gollum, what does he do? He orders 5 pairs of 5 orders of 100 pairs, right? So he's ordering how many? 500 pairs, right? So 500 pairs, I think I made a mistake already. 500 pairs, and then each size is 50, right? So 500 times 50, it's going to give us 25,000 revenue, right? 25,000. And I think I made a mistake over here as well. 420 times 50, it's 21,000. What have I done? Totaling. Okay, so it's 10 orders, totaling 420, right? In this, 5 orders of 100 pairs each, right? So it's going to be 500. Okay, fine, that's fine. So 25,000, right? 25,000 is there. Next thing. So every order is what? 500 times. So every order is 100 pairs, right? So every order is 100 pairs times 50. It's going to be 5,000, right? So 5,000 is going to receive 10% discount. So 500 discounts is going to receive, and how many times is he going to do similar kind of order? 5 times, right? So he's going to receive in total how much? 500 times 5, 2,500, right? He's receiving that much discount, right? Next thing, let's just calculate the gross profit. So that's going to be 22,000 for 250, right? In case of Gollum, right? Gollum. And then administrative cost is going to be what? 500 pairs times no, it's going to be order cost is, each order is 50. So 5 orders times 50 is going to be 250, right? The other guy, what he makes large number of orders, right? So he is more frequently ordering, right? He's ordering more frequently, and he's only ordering in small amount, right? So irrespective of the order size, he's getting 15% discount, right? Next thing, we have some distribution cost. Who does it apply to? Let's just see. Sam receives because the company collects the shoes. So Sam basically goes and collects. So there is no distribution cost for them. For the other one, what is it? 1,000 per order, right? So that's going to be 5 orders times 1,000 per order. It's going to be 5,000. Okay, that's a huge cost for the company, yeah, for distribution. Next thing, it's going to be what 70,850 minus 500. It's going to be 17,350. Next thing is over here. 5250. So 22,250. What did I do? 25,000 times minus 2,500. That's going to be 22,500. 22,500. Right, minus 250 minus 5,000. So 17,250. So who's more profitable over here? Sam, right? Sam is more profitable. Sam is more profitable, it seems like. Right, so that's how we do basically customer profitability analysis, right? So you could use this performer. I'm just using the similar performer right over here, right? So let's just check that as well. So this is chapter number. What is the chapter? Where is the chapter? So this is, I just wanted to check the thing as well. Chapter 6. Chapter 6. And what was our answer? Chapter 6, right? 17,350 and 17,250, right? So chapter 6. Let's just search it, answers, and then right over here. Where is it? It's over here. Okay. So 420. They have a Sam thing over here. Remember? Sam, and then we discount it, and then we get that much cost of shoes. Okay, I think I made a mistake right over there. Otherwise, I think it should be fine. Let's just see one more time. Let's just go back over here. I think I did not account for that in COGS, right? I recalculated the thing, but I did not recalculate the cost of goods sold. Where did I put it? Oops, I missed it completely. Right, so it should be there. It should be there. So that's the amount, right? And why is it not writing? Okay, so 21,000. So this is the guy who's receiving 15% discount. 15% discount irrespective. Next thing is basically it costs us how much? 420 pairs. 420 times. This is 420 times. We got 25. Okay. I thought I had put in the cost of shoes, but I did not put it. I don't know why. 420 times what was the thing? 25. So 10,500, right? Next thing, for the other guy, it's the same thing, but he orders 500, right? So 500 times, what is it? 25, right? So 25 times 5 is 125. 12500, right? That's it. Transportation cost is 5,000 because it's $50 per every. It's $500 per thing. It's 100. No, it's 1,000 times 5. So 1,000 times 5, right? Next thing is administrative cost is how much? I think that was $50 per order, right? So 50 times 5, right? The other one, it orders 10, I think. Yeah, that's why it's higher. But you see who's more profitable over here? It's the Sam who is more profitable, huh? It's the Sam. So even though we are selling a lot of shoes for Gollum, right? So gain is basically say 9.50, whereas in terms of Sam it's higher because we don't have to distribute it because there is no transportation cost. It's 5,000 is huge chunk, right? So if we not had to basically pay them or like supply them the shoes, we would have been earning very high return, right? So it would have been what, 9750 divided by 500. So it would have been 19.5, right? It would have been 19.5. Okay, yeah, that's pretty much it. You could definitely use this performer to not to forget anything, right? Like I did. So that's it for this video. Take care. Bye bye.